Hello, everyone. Is it working? Yes, I think it is. So many thanks for the opportunity to talk to you this afternoon. Thank you for being in the room. I am Antoine Praderol. I am the Chief Investment Officer of Green Angel Ventures, and we are the reference early stage investor in UK climate tech innovation. Personally, as a way of introduction, I've been investing in climate-related startups for the past 7 or 8 years, since 2015. And before that, I worked in the city in equities. So what am I going to talk to you about? I try to answer the question, what is climate tech? I think it's a relevant question to this topic. Then I'll show you how climate tech is doing, so give you some trends, some statistics, exciting stats, I hope. Then I'll dig into the sectors of the economy which are concerned by climate tech, so where is the money going, and also where should it go, which might not be exactly the same thing. And then I'll contrast this, giving you a few exciting examples of early stage businesses that we, Green Angel Ventures, have invested in. So let me set the context, and I'm sure many of you are familiar with the context, but I think it's really worthwhile getting back into that. So in just one graph, the issue that we are facing is global greenhouse gas concentrations. So the concentration of gases like carbon dioxide, and those gases keep being pumped into the atmosphere every day. And so there is more and more, and as the concentration goes up, the planet heats up. And today, we have already reached more than 1 degree of global warming, and we already see the consequences of that global warming with rising sea levels, melting ice caps, extreme weather events, crops having lower yields, and even the future of some coastal cities being uncertain. So really there is a need to do something. What we need to do is to stop the emission of of greenhouse gases, and we need to do that as quickly as possible. And so if we want to reach global warming which is not more than 1.5 degrees, that's this green line here, we need to cut global emissions very quickly and very massively, and that is the challenge. To achieve that, we need to radically transform many sectors of the global economy, and that's why we think it's a massive, it's a very big, and it's potentially the best ever investment opportunity. So that starts to answer the question of what climate tech is. In 2050, the world will be, or at least it must be, net zero in terms of greenhouse gas emissions. And in that world, the winners will be the companies that are able to make products or deliver services in a way which is carbon efficient, or with zero carbon, ideally. So zero carbon is going to be a key source of competitive advantage for businesses in the next decades. So that's what climate tech is about. It's about supporting these future winners, which are the technologies and solutions that directly cut emissions or enable us to adapt to the impacts of climate change. I'd like to make 3 simple points from our perspective. Climate tech requires technology solutions, so technology innovations, new technologies, etc., and science-based innovation, but also it's about behavior change. So if we find solutions to change behavior, that's almost as good as new technologies in many ways. It's about software, and I'm sure many VCs today have talked about software, but it's also very much about hardware. We need hardware to make these changes across many sectors of the economy. And that's the last point, actually. It's across sectors, so from agriculture to energy to transport, etc. And I'm going to come back to that later. And last but not least, that's probably the most important point on this slide, it's not about a compromise between impact and returns, because in climate tech, impact and returns are going hand in hand. If you make an impact, you're going to have a good return, and if you have a good return, it's likely that you're going to have a big impact. So now let's move to the trends in the sector, and these are things that I found in different reports over the past few weeks. So clearly, climate tech is a sector on the rise. There are now 45,000 companies in these different sectors globally, which is 4 times more than in 2010, according to TechNation. There is more and more money being invested into startups and scale-ups in the sector. So that's the figure for 2021, $111 billion being invested, which was a record year in 2021. The amount dropped slightly in 2022, but it was still 24 times larger than 10 years ago. So it's a very, very fast-growing sector. And the important thing is that even though it dropped in 2022, the share that climate tech is representing as a percentage of VC investments has been rising, and it's continued to rise. So it went from 3% in 2017, which is really not that long ago, to 17% in 2022. So this is the general trend. In terms of regions, as you can see on this chart from Dealroom, investments in the US and Asia and Oceania has come down in 2022. However, in Europe, it's continued to grow, so Europe is doing well. And the UK is clearly punching above its weight. The UK is second only to the US in terms of number of companies in climate tech and also investments amounts in climate tech. So is it a profitable sector? Well, it's a bit early in some ways to say, but clearly the sector has been maturing and is maturing. The first element is that we have been seeing rising round sizes. So give you one stat, in 2021, more than half of global investments have been going to rounds which are bigger than $250 million, so very big rounds, and that compares to just 10% in 2017, so bigger rounds. So clearly there are big funds out there which are ready to invest big tickets in established companies. In our view, maybe there are not enough investing at the earlier stage or the scale-up stage. Valuations have been going up, so that's one representation from Dealroom of the global enterprise value of all climate tech startups. So you see it's gone up massively. It's gone down in 2022, but it's still 56 times bigger than what it was a decade ago, and there are now 160 unicorns in climate tech globally, according to TechNation. And finally, looking at exits, which is obviously what we should all be looking at one point, TechNation has counted more than 400 exits through acquisitions and roughly 100 IPOs in climate tech. So it's starting to be a profitable sector. There are very, very encouraging trends overall. And so, it's not really surprising that there are lots of positive investors on climate tech around the world. And one key element is that there is growing government support, globally. What I mean by that is there are more and more green policies and investments. Obviously, not enough. There could be more, but it's growing. And that is because more and more governments are seeing green policies as good for the planet, which they have always seen, but also as a key enabler of energy independence, energy security, and also a key enabler of competitiveness for their region. So these new arguments about energy security and competitiveness are winning over policymakers in the US, in China, but also in Europe and in the UK. So that's a very big positive trend from government support. On the private sector side, obviously, more and more investors and large corporates are talking about ESG, as we know. It used to be very much about understanding the risks, but it's also more and more about the opportunities for corporates, and more corporates want to, make this transition to net zero and are looking at ways to do that. So these trends overall are doing two things. They are expanding the size of the addressable market for climate tech startups, and they are also reducing the costs in many cases of the climate tech startups that we're investing in. So these are very positive underlying trends for the market in climate tech. So moving to my third question, which was sector allocation. Where are investors placing their bets, and is it the right place? So there are different sources which are breaking down sectors in different ways, so it's maybe sometimes hard to know. But I think what's clear is that there are these sectors which are really popular sectors with venture capital. So energy, obviously, which includes storage, renewables, hydrogen, etc. Mobility, we've all heard about lots of investments in micro-mobility or electric vehicles. The circular economy, carbon accounting. And then there are some sectors which are less popular, like food and agriculture, the built environment, manufacturing, complicated, and greenhouse gas removal, and where we need both nature-based solutions and sometimes technological solutions. So, I think the flow of investments is not entirely aligned with the size of greenhouse gas emissions, and therefore with the opportunity to cut greenhouse gas emissions. And just two simple examples are, transport, which is just 15% of global emissions, but has attracted in some years more than half of VC money. On the other hand, the built environment, which is 40% of global emissions, but is still quite underrepresented in terms of VC money. And so our view is that to meet decarbonization targets, we need funding both in the kind of the technologies which have the highest potential impact on carbon emissions. So what I call moonshots here, like for example, nuclear fusion. But that we need to be conscious that this has no impact on emissions in the short term, right? So because these are very long-term projects. And at the same time, if we want to meet emissions reduction targets in the short term, so in 2030 we are supposed to halve emissions, we also need to invest in transition technologies, so things which are ready today, which are able to scale very quickly. So I couldn't resist showing you this chart, which is showing the sheer variety of sectors and subsectors that we, Green Angel Ventures, are being pitched by. So each color represents a sector, each sub-color represents a subsector. And so you see we get a very varied mix of companies in the energy sector, which is blue, transport, which is green, construction and the built environment, the yellow bit, and then agri-tech, also manufacturing, lots of manufacturing in the gray thing, and then also carbon removal. So we see a very big variety, and we think that VC investors who are serious about clean tech should be looking at these different sectors. So now let's move to a few tangible examples of things that we have invested in, and we're quite excited just to show you how this is an exciting sector. So one is Switch, which is a company that has developed uniquely small kits that can convert any bicycle into an electric bike. So it's helping to decarbonize transport, because obviously they help more people commute with their bikes rather than with their cars. And also, converting an existing bike to an e-bike is so much more efficient from a carbon perspective than building a whole new e-bike. So it's really positive in terms of carbon impact. And so we've invested in 2018 into Switch Technologies. And since then, our representatives on the board have been helping the founders realize their vision. And at the end of 2022, they have sold more than 60,000 of their conversion kits. So quite a big commercial success. Moving to another sector, which is a hard-to-abate sector, as we say, heat. So when I'm talking about heat, I'm talking about heating buildings, heating water, also industrial heat. And it's a very hard-to-abate sector. It represents 50% of energy consumption globally. So Naked Energy, this company, has designed these unique solar collectors, which are collecting both heat and electricity in one tube. They're called Virtue. And they have the highest density, energy density of any solar technology. So since our first investment in 2018, they've moved from prototype stage to scaling production, and now they're being distributed from anywhere from Australia to the US, including Italy, Switzerland, the Netherlands, etc. So another good success. They are going to raise their Series B round this year, actually. Moving to another difficult sector, which is the construction sector, building sites are quite large sources of carbon emissions or greenhouse gas emissions, notably due to the large quantity of wasted material. You couldn't believe it if you knew how much material is being wasted on building sites. And so here comes Qflow, which is a software solution that captures a digital account of materials being delivered on site, and that enables the companies across the construction value chain to reduce waste. And cutting waste is not only good for the planet, obviously it's also very good in terms of economic value for the people who are not making that waste. So the contractors and developers that Qflow sells to have already deployed the solution across dozens of sites in the UK and abroad now. So Qflow are now raising their Series A round to accelerate their growth. And last but not least, NatureMetrics, which is a company that offers groundbreaking DNA-based biomonitoring services. So I don't know if you know that, but traditionally, biodiversity monitoring is quite slow. It's not really scalable, and it provides quite patchy data. And by contrast, NatureMetrics solution uses the DNA which is left behind by species, any animal species in water or in soil, and by analyzing these samples, they're able to tell you all the species which are present in an ecosystem around that place. So that technology massively reduces the cost and the time needed to survey nature, and also provides much more data. And so we've invested first in 2019, and since then, NatureMetrics has grown to serve clients across continents and across sectors. And they've raised more than $20 million in 2 high-profile rounds since our investment. So to conclude, GreenEdge Ventures, we think, is really, really well placed to leverage and grow and realize the potential of climate tech investments in the UK. We've got, as I think I showed you, an established deal flow. We see more than 700 companies pitching to us every year across the climate-related innovation in the UK. We have unique domain expertise. We've got an established team, but also we are supported by more than 300 specialist angel investors who are adding a lot of value to our investments. We have a strong track record. We've deployed £29 million in 35 portfolio companies with an IRR of 25%. And we've received £10 million from British Business Investments to co-invest with our angels and with our fund. So that is the reason we want to have even more power to increase and accelerate our impact. And that's why we are working hard to a number of initiatives, including raising our new LPGP fund to increase the amounts that we can put to work in this exciting space. Thank you very much for your attention, and please ask any questions you might have. Go ahead. Yes. Any questions?
I see this as a good sign. It was insightful and in-depth conversation, so there's no other questions. Right? Brilliant. Anthony, thank you so much.
Well, thank you. Thank you for the opportunity.
Next